So usually every Saturday I post a video of me reviewing my data, but this week I have a lot to talk about, and I actually want to. Well, I was gonna backtest anyway, so I thought I might as well stream it since I'm free every Saturday. So right here, I was backtesting Bitcoin for the model I've been trading recently on the Nasdaq. Now, Nasdaq is good. It's just not. I found my girlfriend actually found Bitcoin is much more profitable because I also found that the years that the Nasdaq had the most volatility were the best years, and the years that had the least volatility, like historically low volatility, were the worst years for my model. So obviously there's a correlation between volatility and and my trading results. Now there's a lot of things I didn't consider, but I found a losing streak in Bitcoin. Obviously, Bitcoin is very volatile. I mean, this is an asset that's very uncertain um, in terms of its adoption in the future, and so there's a lot of lot more speculation on it. And well, it just makes sense that if my model benefits off volatility, I should go trade Bitcoin. So I wouldn't. Now, I wouldn't say it's always volatility though. This is what I found because there's a period here in April, March, kind of like early March to June, where Bitcoin had lots of losing streaks. Like I found a lot of losing streaks here, and I realized that this was a very big trend. Now, whenever you trend like this, usually it's not very volatile because price is moving very directionally and it's not going up and down. So on the daily chart though, this looks like a period where there's not much volatility. But if you were to climb down to the hourly chart, intradays we go up and down quite a lot. Like maybe not so much in May, but the volatility was very high. Like you can see some of these moves are not very directional. There's a lot of down close candles mixed in with the up close candles, and well, the data doesn't show that there was low volatility, but what it does show is a realized volatility crush. So I was asking ChatGPT what this meant, because I was trying to figure out, okay, if there wasn't, because the Nasdaq didn't um, react like this during the same period of time. The Nasdaq this year has been really good all year round. So the Trump tariffs have caused volatility, but you see for Bitcoin, it was a lot different. There was a lot more factors involved. There always is with Bitcoin. There's always something going on. But specifically in late 2024, the ETFs were approved. For Wall Street to start selling Bitcoin ETFs, and there was a lot of volatility ahead of this and speculation. So, if you look at the ATR down here, this red line, this just measures the last 14 candles, the average range. So you can see over here it's at 5K as I'm going through. It reaches almost 6K, and I'm not sure when, but there's a moment where it's almost at 6K. I don't know, sometime late 2020, early 2025, late 2024. So it then drops, you know, and as it's rising here, the ATR, the range is dropping, and it's just like this miscorrelation. It should be, if volatility stays the same, going up. Now, obviously, the daily chart is disguised as low volatility, but inside the intraday profiles, there's a lot of volatility. So what this told me was I started researching on why this was. Why does the ATR, why does it go down? There doesn't seem like there's much volatility, and it's very directional. But intraday there's a lot of chop. So what happened was a lot of option traders were unwinding their options after that the ETFs were approved. So I have a ChatGPT query here where I asked what a volatility crush is. I first learned about it on Grok. I was doing a lot of research last night, and I wanted to kind of revise it this morning. So, realized volatility crush happens when actual volatility of a market drops sharply after a period of high movement or uncertainty. So, what that uncertainty was and this is what I'm going to backtest today. I want to see if this period was just as profitable or unprofitable as the other period where there was a trend, to see. The goal today is the first goal I have is to figure out, is my model unprofitable when price is trending on the higher time frame, or is this unprofitable when we have realized volatility crushes? Because it could be either. So I don't. There's a lot of, like, Nasdaq has been trending for most of the year and it's been pretty good all year. So that's why I don't think that it's when it's trending. Which is why if I go back to November here where there was a lot of volatility, I might have to use bigger stops. But I'm hoping to see a lot more moves that I might get wicked out, but I want to see it at least go in my favor after getting wicked out, which just tells me that there was more volatility and to use a bigger stop. But anyways, realized volatility is the measured volatility based on past price data, and implied volatility is the expected volatility. This is actually very important. This is how traders think it will move. So we had we had the ETFs were approved, and then the market eventually stabilized, and it created much calmer movement, which it stabilized around June. That's when profitability came back to my model. This is it gives an example. It doesn't really matter. We're not gonna look at that. So I said, give me recent examples on Bitcoin, Nasdaq. Give me dates in the range of months. So first I had asked for just to give me recent examples. It didn't give me any dates, so I don't know. And then it actually gave me the exact period where I was unprofitable. It said that there was high realized volatility, so there was actual volatility in the market late 2024 and February 2025. Speculation around Bitcoin ETFs. Now Bitcoin's being adopted. What does this mean for the model? For Bitcoin, and everyone was wanting to get in. Some people started taking profits though, and there was a lot of volatility. So that's basically what that means. And then the trigger, people started unwinding their options. Demand for Bitcoin dropped, for options, and we started consolidating and being very calm. The actual realized movement dropped fast, as I showed you in the ATR. You can see how it was like 5,000 and it dropped to 3,000. This was the start of the realized volatility crush. Volatility collapsed as post-event uncertainty drained from the market. So I don't think, and this is very consistent with what I found on the Nasdaq, but every time I had a lot of losing streaks on the Nasdaq, I always looked at the VIX and it was sharply decreasing, which is when volatility goes away from the market. So this is another market where I just proved that every time volatility drops sharply, I don't perform my model. Right. So what I'm trying, I'll get to actually what the solution will be, how I can use this to my advantage, because now I feel like I have a lot more evidence to really feel certain about this. But yeah, this is a very big example though. The crush in numbers, you don't have to read that. And this is why it happens. Uncertainty is removed, no more risk. Volatility tends to revert after extremes, so it went up to an all-time high, and then it crashed down back to 70K. As options decay and open interest drops, delta hedging activities decline, reducing HA feedback loops. I have no idea what that means. Liquidity restoration, spreads tighten, volatility drops, psychological calm, narrative cools off, fewer forced liquidations. So the energy drains out of the system, same way a storm fades once the pressure equalizes. So yeah, and if I just want to show you on the Nasdaq, and then I will show you on the VIX. Or actually, no. We'll just go on the VIX itself. I should have it in, so in 2020 was another very good example of exactly what I'm explaining here. My model was profitable in 2020, same model. But then it became very profitable when the volatility was insane, and I had to use much wider stops. I expect the same thing when I'm gonna go back right now. I'm just gonna go back right now, and I'm gonna back test Bitcoin in November, December of late 2024, basically in early 2025. I expect my stops to have to be a lot bigger, because if we had a VIX for the Bitcoin, like a volatility index for the Bitcoin, I would expect to see something like this, where late 2024 we have a huge rally, and then it gets adopted as an ETF. Eventually things calm down and traders start unwinding their options. Then I'd expect profitability to leave my model, because volatility is crashing very sharply, which is exactly what ChatGPT just described. Um, and yeah, so this would basically be what I'd be looking for. Now, how I can use this to my advantage, like why is this good that I figured this out, is because I'm not trying to predict when volatility crashes are going to happen. I can probably anticipate them and maybe risk less. But when do I really know once things calm? Like, I don't have the time and I don't think I have the knowledge yet to be able to, like, that's really an economist's job or a financial analyst's job. I mean, I guess I could, but right now I don't really have the time. What I'd rather do, and I think it would be better, is find a market where these things don't really happen very often. And for Bitcoin, maybe it's not going to happen anytime soon, but one thing that I was looking into is oil, and that's the other thing I want to maybe backtest today. Um, but we'll go MCL. Thing is, with oil, we don't have the same mechanics where the ATR, the ranges of the day, drops as price is trending. So, like, this never happens, right? Every time price starts to trend higher and have big moves, the ATR is also rising. Maybe not in late 2024, but there probably is some times where these things happen, like maybe also here, 2022, and that might have been because of certain events that happened that caused shocks in the oil market, because maybe some war broke out or some some trade war happened. But all in all, like, this oil has been, by the way, it looks from the daily chart, looks like it's just the best for my model, right? Because you see Bitcoin, you have these huge trends, Nasdaq, you have these huge trends, and then you have volatility crushes. Oil doesn't have that, so oil doesn't play with the same rules as a lot of these other markets. It's much more predictable. So I have a Grok query. I'm trying to show here. So I was talking to Grok and asking what markets would this happen less. Perfect volatility playground. This is micro oil futures. So Bitcoin is comparing it 24/7 chaos. I mean, I don't know if that's, these are just examples. $600 million liquidation in a day. Trump tweets at 3 a.m. and realized volatility spikes and crashes all the time. But oil is a lot more stable. It makes sense why it's always used everywhere around the world. And the thing I found with oil, I just backtested 1 month real quick, and every time I kind of looked at it in the past, oil, there are some good moves, and my model can definitely be profitable, but the moves aren't big. So I don't expect to see 12-hour trades, 10-hour trades, 9-hour trades, like I do on Bitcoin. Even 6-hour trades, I feel like would be very rare. Just from what I've seen, I backed this in one of the best months this year so far, October, and this is just what I've seen. It's not very, it doesn't want to move like these huge moves that are like insane, and you can get like 12-hour. So oil might be a more stable market, but it might also make me less money, and that's why I really need to backtest it for a long time. What I'm thinking of doing is, whenever I expect a volatility crush to occur, maybe this is something I could do every month at the end of it or beginning of every month, as I do sort of like an economic analysis or macroeconomic analysis of different markets, and then say, okay, well, which ones are higher risks having realized volatility just evaporate. So yeah, that's basically what I could do. And then if I feel uncertain about a market, I could switch to oil or continue. But for now, I'm going to continue trading Bitcoin until I get more data on oil. And I also want to start backtesting what I was going to backtest. I just took, I don't know how long I just yapped for, but like 15 minutes. So yeah, so I'm gonna upload this recording to YouTube. I'm gonna stop the recording here. I'm gonna keep the stream going. But I'm just gonna backtest on the stream, and then the recording I'll have uploaded, because the recording really holds most of the information, and I'll probably record again just to summarize the backtesting. But yeah, so I'll stop the recording now. So after backtesting, I found that the period I was looking at on Bitcoin was unprofitable in the trend. But I've been doing more research with the AI, and so what I found was the most unprofitable period this year again was this area here from towards ended beginning of July from mid-April. That was pretty unprofitable. So in my data, you could see there was a few wins at the beginning of April, but mid-April there was only 2 wins until we got to July. Okay, same thing here. 2 wins until we got to July. That was pretty unprofitable. Now, if I compare that to Bitcoin, I was asking Grok here what the period was. Well, actually, that's not important right now. I was asking what's a symmetric strategy, and that's when the profits are volatility is in either direction. So it'll go only up or only down. No, sorry, it'll go up and down. So it'll go up intraday a lot and down intraday a lot. So whenever the market's trending and going one direction, it's not good for my model. So that was why, if I go back to Bitcoin futures, that's why this period was unprofitable. Okay, not because I wanted to see if it would be profitable, even though because there was no realized volatility crush, it was a period of high volatility. So what I found is if I go to the VIX and I go back to COVID, this area was only more profitable, not because I don't think that the more volatility, the more profitable the model is. I just think the more trades there are, and the more the volatility is there, the more market wants to chop and go up and down, and in bigger amounts, not like be flat, but chop as in go up and down, accumulation, manipulation, distribution. The more money I make, so that's why this is just a period where there was huge moves, and maybe it was like an anomaly. But what I am finding that's very consistent is every time volatility sharply fades away, my model is unprofitable. So here's an example of 2020 with COVID. There's another very good example with Bitcoin. Right here, where realized volatility in this period, in this red area, fades away. And the market's very symmetric. But it's not symmetric in the same way. It's actually very volatile, which is why I'm like, okay, so in a very volatile period, I'm losing money. This doesn't make sense. But it was also after even more volatility was present before, and then it sharply faded away. So even though it was still a bit volatile and it did big moves, volatility left the market and it was unprofitable. But also, whenever price is very symmetric, only going in one direction, I'm also unprofitable. Now the daily chart here, on the hourly chart, it might be trending. So on the Nasdaq, it was trending all year, but it was very profitable. This is because intraday there's long wicks, and we're going up and down, accumulating, manipulating, distribution. We're consistently doing these small drawdowns. Where we go back a little bit, we consolidate. We go back to fair value gap, previous days, wick high, and that's where most of my wins are. Like for example, on this day on September 17th, we wicked out to a 2-day low, and then the candles going down 9:30 opens and it shoots up, right? But I feel like on Bitcoin, if you go back here in this period of time, we don't really have many retracements that take out the low of the past few days. I mean, we do in these small periods of time, but there's a lot of very quick movement higher, gaps higher, and then it doesn't start to be profitable again until it starts to consolidate a bit more and chop around. And now it starts to have these overlaps of a few days, and back here was probably profitable too, but here was unprofitable. Another symmetric market. I only backtested until like 20th of November, so it might actually start to be more profitable now. I'm gonna go back to backtesting and see. But yeah, so anyways, let me go back to the AI and see what else it said. So I found every time the VXN, which is the volatility index of the Nasdaq, drops, my model's unprofitable. On NQ, is this similar to the realized volatility fading on Bitcoin? And yes, exactly the same regime. So it is the same thing. Not just that. there's two things I need to look out for: is volatility dropping, and symmetric markets where we're just expanding and everyone's directional. There was a lot of hype behind the adoption of ETFs. Let me see when ETF Bitcoin was approved. January 11th, 2024. No, there was definitely some more things late 2024. I don't know. Whatever. Doesn't matter. I don't really care. So anyways. This brings me to my next obvious conclusion is it makes a lot of sense why my AI recommended I check out oil, because one, realized volatility rarely fades from this market. Second of all, it's not very symmetrical. There's not many periods where, like, yes, here it's directional, it goes down in one direction, but inside this move down, you've got a lot of up and down. So it's not like this is what it would mean by symmetrical. You have just one type of candle going in a single direction, or almost one type of candle going in a single direction. Right? This would be another example. So in these periods, I might not make money. But then how many times, like in this period, I might not make much money, but this is only 1 month. I'm okay with taking a losing month. But then it immediately starts to chop around again, trade to new highs, and then make new lows, and make new lows, and make new highs. And so I think this is probably the best market I could trade. And I'm going to backtest this now, and next week I'm going to come back with more data on this to see exactly how it did. But for now, thank you to everyone who joined in on the stream. I'm going to upload the beginning of the stream and the end of the stream to YouTube, which just summarizes everything I found and what I was expecting and the goal of the session and everything. And so now I'm really just I'm gonna backtest oil a little bit for the rest of the day. Maybe go to the gym, eat some food, and relax until I have to get back in there next week into the market. An update on my trading. Let me stop the recording here actually.